Hello and welcome back to my channel. This video is about principles of costing, and today we're going to talk about budget calculation and variances. Let's go to our example. We have here the budget information. We have the selling price, the budgeted production level, and the costs. Then we have to complete this table. We have to prepare the budget for 3,000 units and enter them in the budget column. The actual amounts are already given here. Then we have to get the variance or the difference of the actual compared to the budget. Then we have to identify whether these variances are adverse or favorable. Then lastly, we have to get the percentage of the variances. In the exam, this usually appears in the task on using formulas in the spreadsheet, but we won't be using formulas for now. It's because we have to understand first how to get the values that we should put in these columns and learn how to calculate them manually. Let's start with the budget column. We have to analyze the budget information one by one. First, the selling price. This is the information that we need to calculate the budget for revenue. Next, the budgeted production level is 3,000. This is the number of units, so we can see it here. Next, fixed overheads. This is the information that we need for the production overheads. Next, materials. This is the information that we need to get the budget for direct materials. And the last is labor. This is the information that we need to get the budget for direct labor. We can now answer the budget column. Let's start with revenue. We can see here that our selling price is 42, and it says here pounds per unit. Remember to always pay attention to all the details like this and the budget information. We have to get the total revenue for 3,000 units, so we have to multiply the selling price, 42 pounds, to 3,000 units, and we got 126,000 pounds. So this is our budget for revenue. Next is direct materials. We can see in the budget information, the materials is 800 and it says here kilos. So the 800 is the number of kilos and not the amount of the materials. Then it says here 12 pounds per kilo. So this is the amount of the materials, but we have to get the amount for the 800 kilos. So let's multiply 12 pounds times 800 kilos and we got 9,600 pounds. So this is our budget for direct materials. Next is direct labor. We can see in the budget information, the labor is 1,300 and it says here hours. So the 1,300 is the number of hours and not the amount of the labor. And it says here 18 pounds per hour. So this is the amount of the labor, but we have to get the amount for the 1,300 hours. So let's multiply 18 pounds times 1,300 hours and we got 23,400 pounds. So this is our budget for direct labor. Next, the production overheads. We can see in the budget information, the fixed overheads is 45,000 and it says here pounds. So this is the total amount of the budget for production overheads. Then the profit or loss budget is the revenue less all the costs. So let's calculate. And we got 48,000. So this is our budget for profit or loss. Next, let's move on to the variance column. Variance column is the difference of the actual and the budget column. But how do we know which one is to be deducted from the other? We have to remember that the way we calculate the variance for revenue and profit or loss are the same. It has to be actual minus the budget. For the cost, which are these three, direct materials, direct labor, and production overheads, they are calculated the complete opposite way, which should be budget minus actual. First, let's calculate the revenue variance. So from the actual 131,800 minus the budget, which is 126,000, and we got 5,800. So this is our revenue variance. Then let's calculate the profit or loss variance next because it is calculated the same way as the revenue variance, which is the actual 52,200 minus the budget 48,000, and we got 4,200 profit or loss variance. Now for the cost, which are these three, let's calculate them the exact opposite way as we calculate the revenue and profit or loss. So it will be budget minus actual. Let's start with direct materials. From the budget, 9,600 minus the actual, which is 9,100, and we got 500. So this is our direct materials variance. Next, direct labor. From the budget, 23,400 minus actual, 24,500, and we got negative 1,100. So this is our direct labor variance. Next, production overheads. From the budget, 45,000 minus the actual 46,000, and we got negative 1,000. So this is our production overheads variance. If you are wondering why we are calculating them the exact opposite on how we calculate the revenue and the profit or loss, it's because these three are the costs. It means they are deducted from the revenue to get the profit. So in reality, their values are negative. And if we calculate them the same way as the revenue and profit or loss, we get the same result. Let me show you what I mean. If we follow the same format as the revenue, which is actual minus budget, for the direct materials variance, the actual is 9,100. Let's turn it into negative, minus the budget 9,600. Let's turn it into negative, and we got the same amount, which is 500. If we do the same to this too, the direct labor and production overheads, we will get the same amount. So technically, we calculated all of them the same way, which is actual minus budget. But we have to follow our textbooks, which is to calculate these three costs the other way around, which is also much easier to do. To make it simple, all you have to remember is these two, the revenue and profit or loss variance, are calculated as actual minus budget, and that's it. That's the easiest way to remember it, and it means the remaining are calculated the opposite way. Next, let's move on to the adverse or favorable column. I don't actually look at the variance column in answering this column because it makes me so confused with all these negatives, but instead I compare the budget versus the actual column. First, for the revenue, our budget is 126,000 and the actual is 131,800, which is much bigger, which is what we want. So this is favorable. For the direct materials, our budget is 9,600 and the actual turns out to be 9,100, which is much lower, which is what we want because we want the cost to be lower. So this is favorable. Next, for the direct labor, our budget is 23,400 and then our actual is 24,500, which is higher than the budget, which is not what we want because it means we have more costs. So this is adverse. Next, production overheads. Our budget is 45,000 and the actual is 46,000, which is much higher than the budget. It means we have more costs, so this is not what we want, so this is adverse. Next is profit or loss. Our budget is 48,000 and our actual is 52,200, which is much higher than the budget. So it means we have more profit, which is what we want. So this is favorable. So we can see the negative values are the adverse ones. Next, let's move on to the last column, which is variance percentage column. Our formula for this is variance percentage equals variance divided by budget times 100. So we will just divide the variance by budget and multiply by 100 to get the percentage. Then, as it says here, we have to enter the variance percentage to 2 decimal places. For the revenue, our variance is 5,800. Let's divide it by the budget, 126,000. Then let's multiply by 100 to get the percentage. Then let's round off to 2 decimal places, so we got 4.60. Next, for the direct materials, our variance is 500 divided by the budget, which is 9,600. Multiply by 100. Then let's round it off to 2 decimal places and we got 5.21. Next, direct labor. Our variance is negative 1,100. Let's turn it into negative. Divided by the budget, which is 23,400. Then let's multiply to 100. Then let's round off to 2 decimal places, so we got negative 4.70. Next, production overheads. Our variance is negative 1,000. Let's turn it into negative. Divided by budget, which is 45,000. Then let's multiply by 100. Then round off to 2 decimal places. So our variance is negative 2.22. And the last is profit or loss. Our variance is 4,200 divided by budget 48,000. Then let's multiply by 100. And it's already in 2 decimal places, so our variance percentage for profit or loss is 8.75. Before I end this video, let me just mention some of the key points that you have to pay attention to. One of the key points are the figures in here and the details here, which tell what these figures are, because these figures here are not always in pounds. Second is to follow the instructions like this, which is to enter the variance percentage to 2 decimal places. Third is to pay attention to the negative values here, which also affect our variance percentage here. And the last is always double check your calculation. I don't know any technique on how to double check calculations here, but what I do is I simply calculate them again. And that's it for today's video. I hope you find it useful. If you want to watch more videos like this, please don't forget to give us a thumbs up and subscribe to our channel. Thank you for watching.